Now to the pandemic, unemployment benefits, and how it will affect your taxes.
Tonight, 13 on your side's Justin Bachman talks with a tax expert about what you need to know before you file.
For many of us, April 15th is an even scarier calendar date than Halloween. For thousands of Michiganders that saw their income change from a job to some form of unemployment, there can be even more moving parts than when they've done taxes in the past. So let's break down some things you need to know going into filing that can make your life a little bit easier.
The needs have changed significantly over the last couple of years, especially with all of the tax laws that have passed.
In March of last year, the American Rescue Plan Act, or ARPA, changed the way that unemployment impacts our taxes. It said UI benefits claimed in 2020 were not taxable, but don't expect that same cushion this year.
Now in 2021, they don't have that special provision that is non-taxable.
Just because you have to pay taxes on unemployment benefits doesn't mean it's all bad. There's even a chance you already paid the government.
You should have made an election, and maybe you didn't even notice that election in the process. And that election is to have federal taxes withheld from your unemployment compensation.
If you chose to have that money withheld, you won't get hit with it in April. If you're not sure, you can check your account through the IRS website.
That's the bad news, and we might have to owe taxes on that. But the good news is we can look at some other credits that are available out there. For example, the Earned Income Tax Credit.
Here's where it starts to get complex. Unemployment benefits are considered taxable income, but they don't count towards your adjusted gross income. That AGI is what determines your eligibility for the Earned Income Tax Credit.
Earned Income Tax Credit almost tripled in this year compared to previous years, so it's one you really want to look at closely.
Here's how it works for a single filer without children or dependents. If your adjusted gross income is less than $21,430, you qualify for that Earned Income Tax Credit. In this example, it's $1,502. The numbers change if you file jointly or if you have children. For those cases, the credits haven't grown nearly as much, but they are a bit higher. You can find the exact AGI requirements and credit amounts at 13onyourside.com.
So I think if we start now, we get ahead of the curve and we get those questions answered correctly.
That's just one part of this year's tax filing, but for people who received unemployment, it could be a big help.
The IRS is behind based on all of the work that they're doing.
Our expert says no matter what your income situation is, the best day to start filing your taxes is yesterday. But if you haven't already, tomorrow or this weekend are a good substitute. Reporting from Grand Rapids, I'm Justin Bachman, 13 on your side.
Two other things you need to know. The UIA's 1099-G tax form is delayed until late next month, and you cannot file until you receive it.
And if you've received a letter from the state saying that you need to repay your unemployment, our tax experts say file as you normally would as the state works to resolve mistakes within the system.